Good morning, everybody. Just giving you some time to connect and to come in, depending on your internet connection. We are happy to welcome you to our webinar today, together with Answert. On this webinar, there is myself and Alan from RMB Boulanger and Ian from Answert, who will be presenting today. I hope you can see my slides clearly on your screen. Maybe the first thing to say, I would like to ask everybody to put your questions in the questions and answers box, or not to use chat, because it would be easier for us to follow up all the questions. And obviously you are then free to contact us after the webinar, because we'll be sending through the slides, and also the recording of the webinar will be shared so that you can share it with your colleagues. So feel free to contact us obviously after the webinar as well if you have particular questions. Now, Ian, if you can take the next slides, please.
Yeah, good morning, everybody. I'm Ian Ainsley. I work with Unsworth, facilitating transportation of your goods through to the EU. And we've been working with RMB for some time now to streamline the whole process, make Brexit a lot simpler, remove trade barriers and so on. We've set up the SSUF, the Short Straits User Forum, in direct reaction to the need to clarify how things operate in Calais, to create an open forum for discussion between exporters and the Calais officials, and generally just open things up so that trade becomes a lot smoother. Next slide, please. So as you can see there, 3 quick bullet points. You're probably aware that Brexit has had a profound effect on exporting. It's no longer as simple as it used to be, but that doesn't mean that it's impossible. We have solutions in place that do make it a lot simpler than people think, and reverse to a certain extent the Brexit effects. As I said a bit earlier, the SSUF is set up as a direct response to the need to address questions that people have on how the exporting actually takes place. Not only to streamline the process, but to generally open up the communication with the officials there, and engage and ask direct questions that people have to create clarity around important issues. So we've already held a couple of events, actual physical events and tours with people, companies in Calais, and webinars as well. It's helped create an environment where the Calais officials are willing to work with us, make things smoother, and just streamline the export process. So yeah, generally a great success. The feedback we've had from people that attended is it's made a difference in how they understand how the Brexit process works, and how they can work with us to make things happen. I think that's it.
Thank you, Ian, for your explanation of the user forum. We'll go to the next slide now. I will be. I'm happy to present you our company. Of course, we're working together with Answert for some quite time now. So our company is RMB Boulanger. We are a fiscal representative and VAT agent expert in France. We also have a company in Belgium, and we work in all of the EU countries. Some key numbers and figures on the screen, so that give you an idea how our company is operating and what exactly we are. So we are quite well, 40 years already in the business, so for us it's nothing really new, let's say that way. But obviously with Brexit coming up, we had of course an increase of demands, and companies that we help I would like to present to my colleague Alan, um, that also is on the call, who will be presenting himself just um, in a short moment. So to give you an overview of our main operations and core business and mission, we obviously tend to first VAT register our clients. So everything about compliance across the EU member states. Overall VAT consultancy services, of course. We also have a dedicated Brexit service for both EU and UK companies. And we also act as the economic operator in the EU for EC marked products. We are based in the north of France, so not far from Calais, and we work with both British companies and EU companies from across the channel. I'm thinking about transport companies as well, and customs broker companies. So to create a kind of a best practice flow for our clients. Alan, over to you.
Morning, everyone. I am Alan Vincent. I'm the only UK-based employee of RM Boulanger, joined in December to bridge that communication channel between UK companies and our office in France. Now, it's my job to talk to you guys about your current situation, find out about what you are doing with your exports, what you're doing to manage your VAT liabilities across the EU, and find out also what you want to do in the future. A lot of people that I speak to have had an export situation pre-Brexit that died off, and now they're just trying to get back into it and just trying to handle all of the new regulations and the changes that have happened. So my job is to sit down with you, find out what you're doing now, what you want to do in the future, and then put together the best, most efficient solution for you, whether that's a really short-term solution, which we can get goods out of the country next week, or whether that's a more long-term solution to be a partner with you for the next 5, 10, 15 more years. So please do, my contact details are at the bottom of this screen. Please do take a note of my email address and my mobile number. I'm available at any time for any questions, and happy to have a sit down with you, either face-to-face or on Zoom, on Teams, or however we can use modern technology now. It'd be great to talk to you in the future. We will go into a bit more detail on the type of solutions that we can offer later in this webinar. But for a more detailed conversation, this is what I'm here for. Thank you. On to the next slide.
Thank you, Alan, for your introduction, and I'm sure people will be happy to have a sit down with you and to ask particular questions. Now, most of you know probably what the effects were of Brexit since last year, since the 1st of January. Just a couple of slides to cover that part, to identify why we are here and what the main reason is of our webinar. So first of all, obviously, we have the complexity of customs processes that added up to your day-to-day work and lives. Veterinary and sanitary inspections and certifications, huge pressure on your supply chain, delivery times, all that gives an additional administrative burden. We all know this from last year, obviously, but we feel also that there is not enough awareness, as obviously we as a fiscal representative and agent, for VAT issues, for fiscal issues and questions, and we think that this is deserves as much as attention as customs issue would, because they're also interconnected. So we are here to address that part of the process as well. So the reality from the 1st of January last year is that B2B transactions are no longer classified as EC transactions, but now are classified as imports and exports between the EU countries and United Kingdom. Import customs duties are due and to be paid in the EU, unless, of course, your products qualify as of UK origin. We must also highlight that products that are imported in the EU, the basic rule is that they attract trigger VAT on import because you're introducing goods on the European market. And well, this is what a lot of British companies struggle with, since the 1st of January last year, is that a lot of EU clients are demanding you to continue as everything was before. So they want to be serviced and getting their goods delivered to their factories or to their warehouses on a DDP basis, meaning that they don't want to be involved in the customs process, in the fiscal process, in the liabilities, and so on. And so our job here is to determine your flows for you guys, to help you understand what this looks like from a legal perspective, from a fiscal perspective, and to help you ship DDP to the European Union, just as you did before Brexit. Now, there is an important update that we would like to share first with you, and this is the change that the French tax authorities put in place from the 1st of January 22, so 2 weeks ago. From the 1st of January, importers into France are obligated to have a French VAT number if you are clearing goods into France and putting them into free circulation. Why? Because the import VAT deferment, auto-liquidation de TVA à l'importation, or what you call in the UK the postponed VAT accounting, has become mandatory from the 1st of January. Now, in order to postpone VAT, in order to use this mechanism, you need to have a VAT number, because obviously the condition is that you report the import transactions in your VAT return, and so you don't need to pay the VAT on import. But so from this rule comes the obligation that from the 1st of January 22, companies must have a French VAT number if they want to clear goods, import goods into France under the normal import regime. Now, so as a result, import VAT is not longer payable basically to your customs brokers. This means that there is no physical cash flow anymore. There is no physical payment anymore to your customs broker, and then them paying that to the customs, and you then claiming that back. So all that does not exist anymore. You cannot sell DDP to the French clients, to French companies, if you don't have a French VAT number that is obviously valid. And some of you may know that before you would be importing goods into France, you would be clearing and then paying the VAT, and that this VAT would be claimable back to the 13 directive. Now, this is not possible anymore. The 13 directive obviously continue to exist. It's not that. It's just that the import VAT is not reclaimable anymore through that particular refund procedure. So what are the consequences of that? The consequences is that now that you're obligated to have a French VAT number, the registration itself can take up to 3 months currently in France, also because of the peak of demands now because of these changes. Obviously, companies are rushing to have a French VAT number in place to be able to continue their business. But again, in basics, this is very good news, as we call it the blessing in disguise, because in the end, when you get registered into France, you will not pay any import VAT at any point. So you would be importing and clearing your goods into France without paying any VAT. You will be no longer stuck into procedures to get this VAT back, waiting for 6 months, accruing all that time, the next shipments that you're doing, and so your credit would be always growing and waiting for that money eternally to get back to your account. And basically, even for companies that would register for VAT in France because they have only French clients for the moment, but this VAT number would enable you also in the future, if you would extend your activities and you would then have in the future companies, clients in other EU member states, for example, Germany or Italy, this French VAT number would also enable you to sell onwards from France to other member states. So basically, it's very good news. And so we think that it's worthwhile waiting for a VAT number, waiting and covering those 2-3 months in order to get one, to then have this full flexibility in order to conduct your business into the European Union again without worries. What can we do for you so that your imports are not blocked while your VAT number is being processed? Because obviously these 2-3 months of waiting time must be covered. I understand that. We all understand that. Now, first of all, we can share our global VAT number with you because we are an accredited fiscal representative in France. We have a global VAT number, and this allows you to use regime 4200 to import your goods into France, clear them, with the condition that the goods are not destined for France, but destined for other EU countries. Some of you may have heard already of this regime. Some of you maybe are using this regime already. In short, you are using our global VAT number to basically execute the EC delivery from France to the other member state after having cleared the goods in France. And because of the fact that goods are not destined to France but to another EU member state, you do not pay any import VAT in this case. Now, there is also other news that we have been informed of this morning. This is really fresh from the press. The French tax authorities announced that basically they realized that the changes are quite harsh for some companies because while waiting for a French VAT number, they wouldn't be able to import into France and sell to French clients. They have announced that there would be a tolerance period for all companies that would register for VAT, that would be in the process of being registered for VAT into France before the 1st of March. So if you start your VAT registration procedure before the 1st of March, you could continue clearing goods into France, paying VAT on import to the French customs broker and customs, and getting your goods DDP to your French clients, provided that you are already in the process of registering for a VAT number in France. And so this temporary rule would be valid until the end of June, so that it would cover the waiting time even for the companies that would register for French VAT number or send in their registration requests on the 28th of February, for example, which is before the 1st of March, and would be waiting for 3 months to get this VAT number. They would be covered for all this time to be using in a way the old system as a temporary relief measure from the French tax authorities to relieve those companies, to make sure that they don't have to stop their business and selling DDP to their French clients. So that's really, really good news. But the message here is to hurry up. We only have now 6 weeks left to start potential registration processes for all you guys, for all the ones that don't have a French VAT number yet. This is really good news, but we should hurry up and we should start the registration process. I would even dare to say that maybe it's better, even if you are not sure if you need this VAT number or not, to register anyway, just to make sure that you don't regret it later on. Because if you would have then imports to French clients in May, for example, that you're not sure of today, at least you're then covered for this period, and at least you can use this temporary relief method up until the first semester of this year. So that being said, how does this all looks like in practice? What are the steps of our solution in a practical way to get you guys going and to get your business going again into the European Union, selling DDP into the EU? First of all, obtain an EU EORI number. You all probably have a British one, but this British one is not valid anymore on the EU sites. So basically, to identify your company at the customs, we need to have a valid EORI number in the EU. It doesn't matter which one you have, whether you have a French one, a Dutch one, or a Spanish one, as long as it's a European one, a European Union one, it can be used to be used import documents and to put you as the importer of records. This one is really easy to get because in the ORE number, it takes approximately 24 hours, very often even less, to get one and to start, well, being able to be the importer of records and so to import into the EU. Appoint RMB as your tax agent, register for VAT in France at the same time. We will have a couple of scenarios later on through the presentation to give you an idea in which cases you would need a registration and which not. But I think in most cases, a registration is a very smart choice to do. Appoint a customs broker in the UK and in France, so on both sides of the channel, so that the British one would then be doing the export formalities, and the French one would be doing the import formalities. I'm pretty sure that Answorth will be happy to take this role on both sides of the channel, together with the partners that we work with in this process. After working so often and so intense with Answorth for the past, let us say, year and a half, there is a kind of a workflow that has been perfected more or less, I think. So I'm proud to tell that to anyone who would like to hear that. We have a certain workflow and a certain understanding between the companies that are working together using this solution to make sure that the flow is as fluent as possible, the communication is as fluent as possible, and that we are the most efficient as we can in our day-to-day work. Now, a little word about France, because obviously we're not advertising for France because we are a French company. Half of our team are Belgian, so believe me, if we would know that, or if we would feel that Belgium would be better, we would definitely advertise for Belgium. But France is really an attractive country, I would say, for British exporters, for British companies, because first of all, of the multiple reciprocity agreements between France and the UK. Just so you know, even before Brexit, France announced that British companies would be whitelisted. They wouldn't have the obligation to have a fiscal representative, to have bank warranties in place with the local tax authorities or whatsoever, which is, for example, the case in the Netherlands or in Belgium. And obviously, because of the fact that we are then not acting as a fiscal representative or having all the liabilities on us when you register for VAT in France, we then, of course, have very democratic rates, and so your compliance cost for this process and to use this solution will be significantly lower than the alternative through other EU countries. Now, over to the cases. I would like to present you 3 cases just to cover most of probably the situations of the companies that are present on this call and that are listening to this webinar. I have identified 3 major situations where your company that could be relevant for your company. So the first one is when your company sells to French businesses only. You are a British company, you're selling to French businesses. The French businesses want you to deliver DDP. They don't want to be involved in the import process, in being the importer of records, and so on and so on. The second case would be obviously when you would have both French clients and other European clients. So you would have imports into France, and then through France, either selling to French clients or to, Germans or Belgians or Dutch or Spanish or whatever. And then the third would be that you would not sell in France. France would be just a gateway to Europe, the first country that you physically hit when entering Europe. And so logically clearing in that first country, not using any T1s because of the often problems and challenges that T1s create. And just using France as a tunnel to deliver DDP to your final clients in other EU member states. So first of all, your company is selling to French businesses only. Here, the solution is quite straightforward and simple. We advise you to register for VAT in France. If you want to sell DDP into France, meaning being the importer of records, taking all the responsibilities to yourself, there is no other way but registering for VAT in France. Obviously, if you are selling DAP, for example, this is not the same thing. Then your French client would be the importer of records, and this is not relevant then for you. But as we know, in most cases, the French companies do not want to get involved into that process. And so our advice would be register for VAT in France, benefit from the import VAT deferment or the postponed VAT accounting, as you call it. Have this cash flow advantage at the same time because you don't pay it anymore. You remain a British company. We are never talking about British companies becoming French or whatsoever. It is a French VAT registration. And this is very important to highlight. Obviously, your company remains liable for corporate taxes in the UK. The French VAT registration only creates one obligation, which is filing VAT returns. That's it. So in short, that would be our solution. And then in the meanwhile, while waiting for the VAT number, as communicated now today, fresh from the press, you would then be using the temporary relief measures from the French tax authorities, allowing you to import into France, paying the VAT on import and claiming it back when you will receive your VAT number in the end after X number of weeks. So the process is quite straightforward. Appoint a customs broker into France to clear your goods into France. Appoint us as your tax agent so that we can process your data and to file VAT returns in France. Mention your French VAT number on your invoice. And we'll make sure then that you are compliant from our side, also making sure that your documents are compliant, the legal statements are there. So that would be really then a part of our job, helping you to coordinate the process with the customs broker, with the transport company. So I think that's quite straightforward and easy. And obviously, this French registration would give you then the possibilities to extend your business, to grow your business over time, and to have the possibility shipping then onwards to other EU member states, if that would arise in the future. The second situation is where your company is selling both to French and other EU businesses based clients. In that case, we would recommend obviously to register for VAT and to because you will need it anyway, because you will be selling to French businesses anyway. So for this part, the obligation arises to have a French VAT number in the end. And in the meanwhile, while waiting for a French VAT number, multiple solutions could be used. For the part of the European customers, you could be using then the regime 4200, using our global VAT number to clear your goods in France and then ship it directly to the other member state, which is the final destination of your goods. And then for the part of the French clients, while waiting for your VAT number, you would then be again eligible to use the temporary relief measures to clear the goods in France, pay the VAT on import, and then claim it back later on. So again, here, all your operations would be VAT neutral. You do not pay any VAT, well, except for that part of the French sales while waiting for the French VAT number. And your company has its own VAT number. Again, you have then all the flexibility and almost all the rights from a commercial perspective, from a trading perspective, as a French company would have. So without being a French company and remaining a British business. Appoint the customs broker in France again, appoint us as your tax agent. So the process is quite similar every time. Mention your French VAT number on your invoices and making sure that we are making sure then that your transactions are filed into VAT return and interest that return, because in this case you would then have EC deliveries from France to other European member states. And then the third scenario, this is when your business is only selling to EU businesses, but does not have any clients in France. So France would be really a tunnel country, a country that you will be using for basically clearing your goods and making sure that you don't use any T1 documents, and have a very efficient process in place. There, basically, you would have the choice either registering for VAT anyway, or using eternally the regime 42, for example. It depends basically of what the strategy of your company would be, what you find more important as a reason to choose this or that solution. In both cases, there are advantages and disadvantages. I would say regime 42, the biggest advantage is that there is no setup time. You don't need to set up anything. You just sign the contract with us, and making sure that all the paperwork is correct. And from that moment, you can then use our global VAT number and conduct your operations through France, selling to other EU member states. Again, the process is quite straightforward and quite similar. Goods are then exported from the UK. There is an export declaration, import declaration into France by the French customs broker. Answorth will be more than happy to take this part on them and help you with that. And we then, as your tax agent, limited tax representative in case of regime 42, to use the correct terminology, would be then helping you, assisting you with the fiscal part, meaning filing the VAT returns and interest returns on your behalf through our own global VAT number. Or otherwise, imports could be done by registering also yourself for VAT in France. This method, the biggest advantage of registering anyway is that, well, in that case, you would have the freedom to sell to French clients in the future. So if that would occur in the future, you don't have to then solve the problem immediately. You are prepared to that. That's obviously a big advantage. And also the fact that regime 42 remains an exception, remains a specific regime, a specific import regime, and may create more probability on audits by the customs tax authorities. That's because they would like to be sure that, well, everything is compliant and correct, that your documents are correct, that really the goods left France, etc. Whereas with the French VAT registration, this would put the authorities more at ease because you are registered in France, because it's more transparent, because they see your VAT filings every month, and so on. So it's up to your company then internally to decide, in this case, which solution fits more with the strategy and the DNA and the identity of your company. But we are always there to assist and to give you our advice and our opinion if asked. Now, I am at the end of my Latin in this case. I think I have told you everything you should know. Alan, if you have anything to add, please go ahead. Otherwise, I will go through the Q&A and answer some questions.
Yeah, absolutely. I missed some of your presentation because I got kicked out, so apologies for that. So I don't know if you've already answered this, but Gail asked what the global VAT number is. And just to simplify it, Gail, it's where your transactions go on our VAT number. So we are responsible then, we are liable for all the VAT liabilities in France and the EU, and your transactions then go on our VAT returns. The regime 42 is limited, as Arthur has said, and there are some restrictions, there are some changes that you have to make to your invoices and to your paperwork throughout the supply chain, but it does provide a really good short-term solution for a lot of our clients. I hope that clarifies it.
Yeah, I very often compare this with a rental car, to be honest. In this case, you do not have your own VAT number in France. You're not registered for VAT in France, so you do not hold any obligations, but you have a rental car. In this case, this is our global VAT number. This is different than our normal VAT number. It's a global VAT number. It calls that way because we are a fiscal representative. We are accredited by the tax authorities in France to conduct operations on behalf of our clients using our global VAT number. So that's that. I have another question from Darren Brundell, and he says, do French importers currently under the VAT threshold who do not have a French VAT number now need to apply for one or do they simply pay VAT upfront and import as usual? So the rule in France is quite simple. Everybody that wants to be the importer of records must have a French VAT number because the use of postponed VAT accounting is mandatory. So
this happens, Arto, when a UK client has a client in France who maybe isn't VAT registered because they don't do enough business, and previously they've been the client in France has been the importer of record. Now, in order for that to continue that way, that French client would have to get a French VAT number. Is that correct?
Yes, Alan, this is indeed correct. There is, of course, there are always exceptions. I am thinking about private individuals. A private individual wouldn't be needing to obviously register for VAT in France. He is a private individual and he is then importing on the same name. He's paying then the VAT and the duties as he would always pay. Same thing as ordering something from Amazon US. You just pay everything you need to pay as a private individual. But in all other cases, I'm thinking also about non-profit organization, for example, and stuff like that. There are types of organizations that are not VAT registered because of the nature of this company, but these are really exceptions. And I would invite, if you have such a case, to have a call with us one-to-one to really determine what kind of a case this is. But overall, the main two situations is either you are a private individual and then obviously you pay the import VAT and the duties if you are the importer. But I think this would be maybe also a reason to organize another webinar, because then we are going to the B2C part. And if not, if your client or if the French receiver is an organization or a company with a commercial activity, then they are obligated to have a French VAT number. Yes.
So the simplest solution then, Arto, really, rather than Darren ask all of his French clients who maybe aren't VAT registered to get a VAT registration number in France, would be to get a French VAT number himself and be the importer of record on all of his exports to those clients. Is that correct?
Obviously, that would simplify things, because then you have just one registration instead of 20. First of all, secondly, your French clients, I hope, will appreciate the fact that you are, saving their nerves and their stress level. Of course, a lot of small clients do not really know, even though they are French companies, don't think that all French companies know how to do all these formalities. Not everybody is involved in customs processes. If you're a smaller company or a store or whatever, maybe you don't have a clue how to do all that. So that in that case, DDP is really a good solution, because you remain in control of the whole chain of events. You are sending your goods, you remain in control, and you make sure that they are delivered where they have to be, without having the risk of anybody else doing at random some random solutions or some things that they shouldn't be doing, with the consequences of maybe penalties, of maybe VAT that is not recoverable anymore. So you can imagine what kind of consequences you may have if the process is not correctly done. I hope that answers the question for Darren. Ian, if you have something to add from a customs perspective, go ahead, of course. Always happy to hear your part as well. I have another question for Hem Patel. He says, we buy US origin pistachios that are imported by our supplier into the Netherlands, and they export to us in the UK. And since the 1st January, the UK port authorities are asking us for this GBCVD. Our understanding is that pistachios needs to be pre-notified. This export needs to be pre-notified using the EPA FFS, and we are doing this. But no further documentation would be required until the 1st of July. Is this correct? If so, do we this made clear to the port officials? Now, Ian, I think this is for you, because this is about the new regulations in the UK for the export part. If you can maybe enlighten us on this, please.
Is that the export from the UK into the EU, or importing from the? It sounds like it's importing from the EU to the UK if we're talking about IPAFs there?
So it's exported from the UK as far as I'm concerned. They export to us in the UK. Okay, they're coming. Okay, they're coming in from the supply in the Netherlands to the UK. Yes.
Yeah. So my understanding is in line with what Hem says there is it's just the IPAFs at this stage, and then later in July things become a bit more convoluted. Having said that, import is not my sphere of expertise. I tend to work with just exports. So if I can just confirm, I'll get a response on that. I'll have a chat with my counterparts in the import department and provide a response a bit later, if that's okay.
Sure. We can come back then later on to this person and notifying by email what your feedback would be, of course.
Okay.
I have another one here. Will be from Helen Morgan. Will you be able to get the reverse charge import VAT per month from the customs portal and link your company to an account if you use a broker, and then to then check against the VAT return? That's a very good question and a very practical one, Helen. So yes, indeed, because of the fact that the postponed VAT accounting in France is mandatory, it is automatically injected into your VAT return. But it still remains your obligation to be sure that the amount that is pre-injected by the French tax authorities to your VAT return is correct before filing the VAT return. And so, yes, what happens is that when we are the tax agent for a certain company, for our clients, we then ask access to the French tax authorities because we are then appointed as the tax agent to your account. So we are then able to log in. And our job will effectively be together with you to make sure that the amount that is injected by them automatically in the beginning of the month is correct before filing the VAT return. And to be able to check that, the best way is to obviously run through all the import documents and make sure that the reverse charged import VAT that is put on the preliminary inserted amount in the VAT filing is correct. Hope that's answers your question. And I have another one, maybe in regards to D2C movement from France to the UK. Is the French consumer, I'm guessing that that's B2C instead of D2C, is the French consumer liable for the VAT registration, or as this is a consumer, they don't have to be VAT registered if a French PVA equivalent is applicable, or is VAT paid upon import? And also if this is a DP movement under D2C to the UK exporter, if they have to be liable to be VAT registered in France, are they also obligated to use the French postponed VAT system? So yes, if we are talking about B2C movements, this is first of all the question to determine whether this is DDP or not. I think again, this is a whole different maybe webinar to organize, but the principle is simple. If you are determining who the importer of record is, if that's you, then obviously the company must be in some cases registered for VAT in France, in some not. So this is really to discuss then case by case. You probably also heard about the new rules that they have put in place into the Europe with the OSS and IOSS. But if the consumer, the private individual, is importing into France, they don't have the obligation, obviously, to be VAT registered. Moreover, in that case, if the importer is considered as a private individual, the VAT is not recoverable anymore, obviously, because VAT would be only recoverable for a company that conducts commercial operations. So in that case, it's just paid together with the duties, if there are any, and that's about it. Hope this answers your question, Andy. Guys, Alan, Ian, if you have something to add, please be my guest.
We just have another couple of questions on chat, Otto.
Oh, yes.
One from Michael Evans, and how do you charge for this service? The charging rates are slightly different for each of the solutions. So under the regime 42, there is a percentage based on the shipment value, and under the standard regime 40, where you have your own French VAT number, you're doing a filing every month to the French tax authorities, and there is a fee every month for that. And that is based on the amount of sales you do in the EU as a whole. And there's a bit of a sliding scale on that. Well worthwhile having a proper chat with us to find out your exact position, and we can give those rates to you, but they are slightly different for each regime. And then another question from Michelle Beard, who is a GB customs agent, who says, our client has a French VAT number and will be the French importer of record. They are a non-legal entity in France, so they will not charge French VAT. The reverse VAT applies to their French customer. Does the GB exporter, as they are now the French importer, have to complete French intrastat returns? Arthur, I'll let you take that one.
I'll take that one. So the French intrastat return is to be completed only if you have a movement from France to other EU countries. So if the sale is to their French customer, then and the goods are remaining into France, then there is no need to file an intrastat return. But if the goods are sold to another EU country and you have a subsequent movement of goods from France after clearance to let's say Germany, for example, then of course the intrastat return is due. Also because in France there is no threshold for intrastat return. It is obligated, it is mandatory to file one from the first euro what concerns the flow that is outgoing from France. So if you are clearing into France and then selling onward to another EU country on a B2B basis, then intrastat return is due. Hope that answers the question. I think we are coming to an end of this webinar. I can see another question. Alan, you want to?
Yeah, just there's a quick question from Peter MacArthur in the question and answer section. He said the subject is mainly around DDP, but does the same benefits stroke processes work if the terms are FCA UK and the buyer stroke importer is based in Germany?
Okay, so in that case, it would be the German company that would be the importer of records into France physically, and then probably transferring. This is how I understand, Peter. Correct me if I'm wrong, but then your German client would be then transferring the goods from France to his own country, basically to Germany. Then, so yes, the principle would be the same. It doesn't really matter whether that would be a British company or a German one. The importer of records must be registered for VAT in France, or either, in this case, he could be using regime 42 as well. If that would be always the same operation in this case, and he would always import into France to just transfer his own goods to Germany, in that case, he could use also the regime 42 solution. Or if, of course, the German company is not transferring the goods to Germany and maybe sometimes selling it directly into France, in that case, a VAT number registration in France is mandatory. So basically, the principle remains the same. Whoever is the importer of records into France takes the responsibility. And so judging on the type of operation that you're conducting, either import into France and sale on French territory, in that case, registration mandatory and potentially using then the temporary relief measures that they publish today. Either if there is always a transfer of goods from France then to Germany, in that case, a choice could be made by registering for French VAT anyway, or using regime 42, for example, in order to transfer the goods from France to Germany. Hoping that would answer the question.
And I think the last one, Arthur, is from Saif Khan, who wants to have a quick conversation about the comparison of having a French VAT number and using representation in France to access the EU, and having possibly a German VAT number and using Germany as the access to the EU. Are there any benefits or problems either way?
Now, this is a very tricky one. I adore Germans. I really adore them. just for the cars that they are producing. Already that would be a great reason to adore these people. But it is true that, and Germany specifically now, it is a quite easy comparison. Germany has a very, very strict rules on what concerns the import, and very often our clients struggle a lot to import into Germany as a non-established company in the EU. The German government, or the German customs authorities, allow, and this is what came to my ears very often, allow to import non-established companies 10 times a year into Germany, and that's the maximum. And they demand direct representation. They demand you to be to have a legal address in the EU. Now in France, we don't have all these problems. The only question now is your customs agent willing to represent you indirectly in France? And obviously Answorth and partners are willing and are happy to do that. So in France there are not really these kind of questions. um, so yes, I would say France is definitely more attractive than Germany in that sense, not only because of the proximity and the geographical reasoning, but also because of the rules that, in theory, yes, it should be governed equally to all EU law. Um, but this is also the problems that people encountered with T1s. The rules are the same, but the interpretation is very often different. And if you have to keep in mind 27 different interpretation, 27 different customs authorities and states into the EU, it becomes a challenge to go clear in those countries one by one. So I would definitely in that case choose France over, let us say, Germany in this example, but even Belgium and the Netherlands, because of the mandatory bank warranties that have to be put in place, for example. There are always very often restrictions for non-established EU businesses, which British businesses now are. You are not established in the EU, which we do not have in France because we still consider you as our brothers or at least cousins, just, next door, uh, literally that. So and this is why I think it was important that the French government gave very early, before Brexit already, clear signs, clear sounds that British businesses will not be hunted down in a kind of a witch hunt or something. On the contrary, they are whitelisted and they're not considered equally with all others outside the EU companies, such as US companies or Chinese or Russians or whatever, countries outside the European Union. Um, and I can see Saif Khan is answering now. Thanks, Arthur. German customs allow non-established companies to import 9-10 times a year, like you said, but both France and Germany to import on a regular basis, one would still need an EU established importer of records, wouldn't it? So technically, Germany or France rule remains same. Well, yes and no. Importing into France, you need to have a French VAT registration, but you don't need to have been to be established in France. And this is the whole difference with Germany. Germany demands being established. It's not enough to just have a German VAT number, whereas in France, it's just enough to have a French VAT number. And if your business does not touch any clients in France and you are selling onwards to other countries, you don't even need that. You can just then use regime 42, and in combination with our global VAT number and Answorth and partners doing then the custom side. That's the biggest. Oh yes, EU law says clearly that IRM must be EU established, but this is another point of discussion and interpretation currently in the EU, I think. And I think, Saif, you're right to point this out. And I think maybe in the end, in some future, and I hope it's distant future, it will be this way. But for the moment, it is not. For the moment, it is only the when you well, basically the other way around. When you want to export from the EU to non-EU countries, that you must be established in the EU. So that they already put in place. For the moment, the other way around, as you say, Saif, so the obligation to be established in the EU is not clearly put in all EU countries. But in Germany, it's and still in Germany, it's weird, why then 9-10 times? But it's like in the middle. Then you must be established, but you can go ahead for 9-10 times as a trial or something. So it's a huge point of the debate within the European community. But
and at the moment, that's what makes France so attractive.
Yes,
isn't it?
yes,
Because
yes,
the
indeed.
French government have deemed that a French VAT number is the equivalent of being established. And the importer of record is the French VAT number, but it's still owned by the UK company. So the UK company still has all of its tax liabilities, corporation tax, etc., in the UK and not in France, because it's just the VAT number that the UK company owns in France, and that holds as the importer of record. And that's what makes that transaction so appealing.
Very much indeed. And I think here is the importance of this whitelisting of the British companies by the French government, saying we will not consider the British companies as all other companies established outside the EU. We will whitelist them, and the whitelist is quite short. It's not only Britain. There is, for example, Australia in that whitelist as well, and Japan, if I'm not mistaken. A couple of countries are whitelisted, with whom France has very extensive ties and reciprocity agreements, and Britain is one of them. And this is, I think, a very important, sign, or call it whatever you want, towards our British neighbors, that they are more than welcome to conduct their business through France. But yeah, we can go on this for many hours, and it's almost a philosophical debate. But we'll definitely keep you posted on that. If there are some changes. I think Alan, Ian, my dear friends, all of the attendees, I can see a lot of you are still there. We're coming to an end of this webinar. We are very, very grateful to have had you today, to have had your attention today. Thank you very much for your attention, and well, stay tuned. We'll send everybody a follow-up email to share the slides and also the recording. And I would very much want to wish you a wonderful afternoon. Take care, be safe.
Take care, everyone, and I look forward to speaking to some of you soon.